Hey traders! Kindly listen to this before I say a word.
Have you ever placed a limit order at a fair value gap, but prices keeps on going without you tracing back in? This is because that may have been potentially a breakaway gap. Breakaway gaps are just essentially imposter fair value gaps that have a low probability of getting traded back into before a certain drawn liquidity is reached first. Now I know that's a mouthful, but I'm gonna give you an easy two-step criteria to identify them. Now as you may know, fair value gaps are a 3-candle pattern. If the third candle manages to close above the second candle's high, that means there is a low probability for price to come again into the gap to then trade towards the drawn liquidity. And the second one is the closest PD array. In the first example that I showed you, even though the third candle managed to close below the second candle's high, there was already an order block which price could continue higher off of. Therefore, that closest PD array should be orange and not the fair value gap itself.
Now, let's analyze it. Many times we take trades on fair value gap, but we tend to lose money. But, I am glad this video has tried to show us the reason behind that. There is a lot that he has mentioned and we need to understand them so that we can be able to know when we are going wrong in Forex. That's why in videos like this, we break down each and everything down so that we can all understand everything said. He mentioned about breakaway gap, which I know most traders have never heard about. And he said, these are gaps that have a low probability of getting traded back into before a certain draw on liquidity is reached first. So, what is draw on liquidity? Draw on liquidity means hunting the liquidity of active traders, like hitting their stop losses or activating their stop orders like sell stops or buy stops. So, just connect a breakaway gap to draw on liquidity and you will see how they actually work and why they are called breakaway gaps. He went further to explain how you can identify this breakaway gaps. He uses this 2 criteria. 1. The third candle of a fair value gap. 2. The closest PD array. Now, number 1 criteria using the third candle. First of all, you have to know how to identify a fair value gap. And therefore, real quick. Fair value gaps are created within a 3-candle sequence and are commonly visualized on the chart as a large candle whose neighboring candle's upper and lower wicks do not fully overlap the large candle. The reason why a trader might be interested in where these fair value gaps occur is simply that the imbalance created by them can become a magnet for price in the future. So, let's continue with understanding how we can identify a breakaway gap in Forex. It is explained. Listen, if the third candle manages to close above the second candle's high, which is the wick, he says, that shows there is a low probability for price to come again into the gap, to then trade towards the draw on liquidity. Number 2 criteria using the closest PD array. So, what is PD array in Forex? First of all, let's understand the meaning of words PD array. PD is an abbreviation used for premium and discount, while array means arrangement. So ICT PD array is an arrangement of ICT tools in premium and discount zone for trade entry. To understand PD array, let's first understand the premium and discount zone. What is ICT premium and discount zone? To find ICT premium and discount, we use Fibonacci tool with following inputs. 1, 0. 2, 0.5. 3, 1. We will plot the Fibonacci from an old low to old high or vice versa. As you can see here, the area from an old low to old high is called dealing range. And 0.5 level of Fibonacci is equilibrium of dealing range. Area above the equilibrium is termed as premium zone, while the area below equilibrium is known as discount zone. PD array is divided into 2 types on the basis of premium and discount zone, which I will explain as follows. 1. Bullish PD array. Anyone willing to buy will buy at discounted price, so bullish PD array is basically the arrangement of ICT tools to look for buy in discount zone. You would be buying in discount zone when your bias is bullish or after a market structure shift to the upside, so you can check the following tools to buy. 1. Bullish mitigation block. 2. Bullish breaker block. 3. Liquidity void. 4. Fair value gap. 5. Bullish order block. 6. Bullish rejection block. 7. Old low. You have to look for these tools in discount zone. If one is not present, you can look for second, and so on. If there are multiple ICT buying tools present in discount zone, you can wait for price to test any one of them and get rejected, so you could execute a buy trade. A real market example is shown on the screen. 2. Bearish PD array. Anyone willing to sell will sell at premium price, so bearish PD array is basically the arrangement of ICT tools to look for sell in premium zone. You would be selling in premium zone when your bias is bearish or after a market structure shift to the downside, so you can check the following tools to sell. 1. Bearish mitigation block. 2. Bearish breaker block. 3. Liquidity void. 4. Fair value gap. 5. Bearish order block. 6. Bearish rejection block. 7. Old high. You have to look for these tools in premium zone. If one is not present, you can look for second, and so on. If multiple ICT selling tools are present in premium zone, you can wait for price to test any one of them and get rejected, so you could execute a sell trade. A real market example is shown on the screen. As I have broken down this PD arrays, you can now understand how he is able to identify the breakaway and being able to take profitable trades. This brings us to the end of this video. Don't forget to subscribe, like and share. I will see you in my next video. Listen traders, before you make any big mistake, like paying for that expensive course, try reading this book first. This is basically what you are going to be taught by your mentor. In fact, not even everything. If you are a beginner and you have learnt only basics, don't dare funding your Forex account, because you will not like the results. This book will introduce you to another side of Forex trading, because you cannot like forever buy at support and sell at resistance. This book comprises of everything you need to know about smart money concepts and price action, and everything is explained simply. Grab your copy at $10 only, and it will save you from a lot rather than paying for now. If you want to kick off your Forex journey, WhatsApp this number to order your copy. First come, first serve.